Welcome to the Daily Business and Finance Show. AI surge fuels disinflationary boom, a stock market upside? Celsius Holdings and PepsiCo take a dip, while Cleveland-Cliffs eyes Russian plants. Energy Transfer seals $3.3 billion deal with WTG Midstream, UPS stocks see red for the seventh day. Analysts call in to Celsius sell-off, Hess shareholders greenlight $53 billion Chevron sale. Morgan Stanley optimistic about the second half 2024 and HubSpot's potential Alphabet deal causes stir. Stay tuned after this short ad break to delve deeper into these headlines and more. Alpine Macro forecasts a possible disinflationary boom as a result of an upswing in AI investment and productivity enhancements in China, which may propel stocks. This boom, characterized by robust economic growth coupled with reduced inflation, could commence from 2024. The bond market indicates that inflation hiccups are short-lived. The augmentation of capital in AI-related data centers is enhancing corporate efficiency, while the economic proliferation of China is being fueled by automation-led productivity growth.
The growth in sales for Celsius Holdings decelerated to a rate of 39% for the week that concluded on May 18th. The company's market share experienced a slight decrease, falling from 10.8% to 10.5%. This information was provided by Dara Mohsenian, an analyst at Morgan Stanley. Additionally, the pricing of the company saw a year-over-year decline of 7.2%. As a result, there is a cautious outlook for the near future despite potential opportunities for growth within the U.S. market.
Cleveland-Cliffs, a prominent iron ore mining firm in America, is allegedly negotiating to purchase the American assets of Novolopetsk Steel, Russia's leading steelmaker. The potential transaction could exceed $500 million and encompasses steel mill facilities located in Indiana and Pennsylvania. This represents Cleveland-Cliffs' initial significant action following an unsuccessful attempt to take over U.S. Steel the previous year.
Energy Transfer has entered into an agreement to purchase WTG Midstream Holdings. The sellers are Diamondback Energy, Stonepeak, and the Davis Estate, with a transaction value of $3.25 billion. Included in this acquisition is a pipeline network spanning 6,000 miles and 8 processing plants. This strategic move will augment Energy Transfer's access to natural gas resources and bolster its operations in the Permian Basin. The transaction is projected to contribute significantly to distributable cash flow by the year 2027.
Shares of the United Parcel Service, also known as UPS, have experienced a decline for 7 consecutive days. Over the course of 6 trading sessions, they've seen a loss of 7.1%, closing at $137.61 this past Tuesday. In comparison to last year, the stock's value has decreased by 18%. Despite these challenges, UPS maintains its confidence in their recovery strategy. They anticipate several growth drivers that will aid in their turnaround during the second half of this year.
The stock of Celsius Holdings has experienced a notable decline, attributed to a slowdown in sales growth and an uptick in promotional sales. This information is based on the latest data from Nielsen. However, market analysts are of the opinion that this decrease might be an exaggerated response, potentially presenting a good opportunity for investors to buy. The energy beverage firm continues to grapple with challenges as it adapts to its distribution agreement with PepsiCo.
Yasminer Hess, an oil producer, has received approval from its shareholders for a sale to Chevron worth $53 billion. The vote was not without controversy and abstentions due to concerns about valuation and an ongoing arbitration case with ExxonMobil. However, the majority were in favor of the merger. The deal is still pending approval from the Federal Trade Commission.
Morgan Stanley foresees a favorable market scenario for the latter half of 2024, with projections indicating steady growth, relaxed inflation, and policy. The company expects robust earnings per share growth and suggests an overweight stance on global equities and fixed income spread products. Nevertheless, post-2024, unpredictable factors like elections and geopolitical conflicts could potentially influence the market.
Alphabet, the parent company of Google, is said to be in advanced discussions for the acquisition of HubSpot. HubSpot is a marketing software firm with a valuation exceeding $30 billion. The deal, which will be entirely in stock, has not yet been finalized and still requires antitrust approval. This potential acquisition aligns with Alphabet's ongoing growth strategy and follows their robust quarterly results. And that's a wrap for today's episode of the Daily Business and Finance Show. Stay savvy, stay informed, and we'll catch you on the next wave of business news. I'm Montgomery Jones.
And I'm Amalia Dupre. Until tomorrow, stay safe and farewell for now.
This content is sourced from the Seeking Alpha website, so support our podcast by becoming a Seeking Alpha Premium subscriber. See the show notes page for links to sign up. This episode is produced by Classic Studios. This podcast provides information only and should not be construed as financial or business advice. Check out our other podcasts in our network at classicstudios.com.